Hello guys. We are back. We are back again with another video. So, boy Stephen Shakes, and guys, this week I just feel like blessing you with some bangers, guys, and some nice educational videos on the forex market, how to analyze psychology and all that. So, guys, today's video we are gonna talk about insurance entries, and I'm gonna talk about the types of insurance entries and when to use insurance entries, and how to navigate through insurance entry in the market when looking for insurance entries. So we are gonna go to the charts. I have something that I planned for you guys, something small. Okay, so guys, first of all, we are gonna start talking about zones, values, value areas, support or resistance. And I'm saying this cause we have different names. We don't trade the same strategy, but sometimes we are looking at the same thing. But for some people, they'll call it a support. Some will call it a zone. Some will even call it an order block or whatever. That's why I put a zone or value areas. Okay, so guys, let me assume we are not beginners here, but just a quick lesson if you are a beginner. A support is basically this is a support. I've indicated it. This is support because it's supporting price comes here, it taps off, then it taps off. A support only becomes valid after two touches. So one, this is the first touch, second touch. Now here we are obviously looking for buys. Then this is the resistance, is the resisting price from going any further. So it became valid after two touches. You see, you wait for two touches, because like price can just be there and then say this is your resistance, just like that. You have to wait for it to tap at least two times, and then you can see which yes, this is the resistance. And then once price is gonna come back here, that's when you can start looking for sales. Okay, guys. Let me just delete this and let me go back to the main presentation. So yeah, the market doesn't always get to our zones now, value areas or like our support and resistance. Sometimes it can just come and feel and leave a space like here. It left a space and then it dropped. You see? But as for you, you are waiting for it to come in the resistance itself before it drops. Okay. Then this is a hook point or an order block because it made like a small correction, impulse correction, and then it dropped aggressively, breaking these lows. So some call it an order block, some call it a hook point, and this is where like people will wait for the market to get back here and start looking for sales. And sorry guys, all my examples are just for sell positions, but it's also the same in buying conditions or like yeah, it's just the same. I just deleted this by mistake. Let me just edit on. So people look for sales in here, but sometimes the market might not reach the order block or the hook point. What do you do? That's when you wait for an insurance entry because you are not sure if the price is going to commit to your prediction. See, guys, when price is approaching this resistance, you predict that it's gonna sell. You see, but then it doesn't get to the resistance, and then you see it's starting to drop. When it's here, what do? You wait for an insurance entry, which ensures you that yes, the market might drop, it might continue dropping, and then you can enter your sell positions. Because, like, what if you find it all the way down here and then you missed just because you were waiting for something that didn't happen? You were waiting for price to get at the resistance, but it never got there. And for some of us who know how to use this insurance entry method, we got sales in here, we got sales in here, all the way down here. So, I want to teach you about that, guys. Insurance entry are those entries that ensures you that yes, give you a reassurance. They reassure you that yes, market is going to drop. Okay, when do we use this insurance entry? When unsure if the market will commit to your analysis or prediction, always wait for an insurance entry. You see, because you predicted that the price will come to the resistance, but now it's maybe giving signs of reversing while it's here. What do? You wait for an insurance entry. And I'll come back to this point later on. So, an insurance entry, there are two ways to take it. There is a reduced risk entry or a risk entry. Risk entry, just the RE, risk entry, or reduced risk entry. So for some of us that have fixed risk, I risk 1% on every single trade that I take. So me risking 1% doesn't mean that because I took a risk entry, I'm gonna lose more than 1%. No, I'm still gonna lose 1% if it turns out to be a loss. But it's just to show you that here we use pending orders. We use pending orders because we are unsure if the market is gonna drop. But then once we see we get triggered in here, we get triggered in a sell, we are already in a sell because we can see that yes, market is committing. More like a risk entry is, let me say you're waiting for this pattern. Price is currently here. You have this pattern drawn like this. While the market is here, you take your entry while the market is here. It still didn't give you any signs of, yeah, maybe it's gonna drop or not. And then later on, it just ends up going up, taps you in, you are in, triggers you, like you take a loss, and then it continues dropping. So this is the type of risk we are talking about. It's common for price to do this, but it's very uncommon for price to trigger you and then go all the way up and then come down again. So not always though. We talk about probabilities and all those things, possibilities, which we are gonna talk about later. So this was just a small presentation that I had for you guys. I hope I was really clear on that, but I'm gonna give you examples on the live market with a trade that I took today. Trade that was actually a loss though. So let's go to Bitcoin. Let's go to Bitcoin. So first of all, I'm gonna go to the, just if like you can see this, I'm gonna go to the daily time frame. Let me go to the daily time frame just to give you a quick glimpse of what I'm talking about, the insurance entries and all those other things. Ish, the market is the Wi-Fi is slow. The Wi-Fi is very slow today. Yes. Now I'm not sure if I'm gonna drop this video or not because the internet the internet is disappointing me. So if only there was a way to select all this and hide it, ne? But okay, guys, no problem. So yeah, so we are on the daily time frame, and this during January 2025, this was the highest point Bitcoin was at. So price came and then broke. Price came and broke this high. It came and then reached all the way here, dropped down, came here, and then yeah. But before here, we can see that price made this pattern. Okay, someone is texting me. So I thought someone was calling me, so I'm not gonna pick up a call in the middle of a session. So this is a pattern. Some people can call this an order block, a value area, a hook point, or whatsoever. But we can see that there is value in here because price impulse all the way up, built volume, and then when it built enough volume, it went all the way up, like breaking these highs. So we can mark this as a value area. As a value area. This is our value area. We are waiting for price to come here, to come down here, so we start looking for buys. So we can see that yes, price is coming down here. Let me also just mark this high. See, this was more like a double top, and price got in the double top, wicked out a little bit, and then dropped. Now we are waiting for it to drop here, come all the way here, so we start looking for entries. Let me go to the 4 hour. Let me skip the 4 hour because like the internet is bad. Let me just go to the 1 hour time frame. Because like, oh, okay, that was fast. Yeah, so as we could see that price was approaching this value area, we were looking for sales. We got sales in here. We got sales in here. This was a value area. We got sales in here. Got sales in here. And the only reason why we are looking for sales is here because it's because the market dropped aggressively, breaking all these lows. These are lows. These are lows. Breaking all these lows. So we can say this is a hook point, a value area, or a zone, whatsoever, guys. And then you can also see that yes, price low, broke this low, and we're very comfortable looking for sales because Price moves from value area to value area. This was a value area and this was a value area. So we could tell that yes, price is coming from this value area to the top, coming to this value area to the bottom, so we can start looking for sales. So you see, guys, we're comfortable looking for sales because we see that price is being attracted by this value area. So price is dropping. So we also got sales in here, but let me not talk about this ones. So yeah, when price broke here, we had this hook point. You see this aggressive move. Price built some volume here, then poof, all the way down here, which came to break these lows. This low. Let me not say lows. This low. It's just one low. Came to break this low. We can call this an inflection point because you can say, yes, price also built volume here, but like the initial move was here. So was here. But we have an inflection point. We had this inflection point. We had this inflection point, which we could also look for sales, but it's more like riskier and compared to this one because the initial move came from down here, price built volume, and then the volume was enough to break these lows. So we wait for price to come to this. We could have waited, but guys, sometimes if you are waiting for too many things, you will miss out on opportunities. So that's when the insurance entry had to come in because price came, as you can see, price made this high. Let me just use a marker. Price made this highs. The market came to break this highs, made this high, failed to get to reach to the value area, broke this highs, and then we finally got to the inflection point. And once we got to the inflection point, guys, we it's an inflection point. Remember, it's still risky because we have this value area here. A value area is stronger than an inflection point, so it's very possible for the market to come here and then from here. You see? Let me just go back. So I want to be using this. I want to be using this. So yeah. Um when price go to the inflection point, guys, we didn't get any proper reversal candlesticks here. So that's when we had to wait for the insurance entry. An entry that will reassure us that yes, the market can drop. And we dropped all the way to the 15-minute time frame when price tipped in the inflection point. Sorry. When price stepped in the inflection point, we waited for an insurance entry, and we got this beautiful, beautiful pattern right here. We got this beautiful, beautiful pattern right here. You see, guys. So this was enough confirmation to show us that yes, price impulsed all the way down here, corrected, and then so it might impulse all the way down next. Because price, remember in the first video in the GBPK trade recap video, I said that price moves like this: impulse, correction, impulse. Okay, guys. And if you didn't watch that video, it's in my YouTube. I might just drop the link in the top corner here so you can watch it. A lot of valuable lessons in that video. So guys, don't forget to check out that video. So yeah, when price came here, we we had two possible entry criteria here. We could take the risk entry or the reduced risk entry. So the risk entry was this one. After we got this candlestick that engulfed the bearish, this red one, it's a reversal candlestick. Place our stop loss here. And you see, price moved all the way down here for 9%. But obviously, you're not gonna get that 9% because you are managing trade and you're managing the trade, and just you can see the market impulsed all the way back up. So we are targeting these lows. We're targeting these lows for price to come to these lows. Sorry, for price to come to these lows, which never got here, but so could have walked away with 50% of the move, roughly about 4%. Yeah, 4%. And that's where we could have traded our stop loss here and taken out for 4% profit. Okay, that's our risk entry. So the reduced risk entry was here. You wait for price to break. You don't wait though. Once price is here, you set a pending order, a stop loss, a pending order, a sell stop down here. So you see, targeting for these lows, roughly 5%, but obviously price didn't get here for 5%. So we would have walked away with 1.3%. 1.3%, guys, is still a lot of percentage. It can do justice for you. Let me say you are trading a 100K account that could have been like 1.3 US dollars or pounds, whatever currency you are using. 1.3 in just a single trade. 1.3 to us Africans, especially Namibians, that's like $20,000 Namibian dollars. That's a lot of money, guys. And yeah, that's just the importance of having in big capital, a big amount of capital, which we are going to talk about later. So this they reduce risk entry, and this was a risk entry. As you can see, guys, you would notice that yeah, with the reduced risk entry, the reward ratio, risk to reward ratio, is a little bit low compared to the risk entry, because if we could have took the risk entry, we would have walked away with 3-4%. So let me just pick up this call. Yeah, hello. Yeah, we spoke. Yeah, in about an hour. Sorry, man, I was recording a YouTube video. Let's talk later. I'll text you so you call me. Yeah. So that was just my sister, guys. So yeah, this is our insurance entry. And as you can see in the first presentation up there, I said it's when price doesn't maybe get to our value area or our zone. Yeah, it can be like that, but sometimes if you're not sure if it's really gonna drop, let me say you don't get a reversal candlestick here. Because in moments like this, that's where you look for reversal candlesticks and you don't get the reversal candlestick. You wait for the insurance entry. Impulse, correction, impulse. You see, guys? You see? Oh, insurance entry can work out mostly in a lot of scenarios, not just support and the resistance. Sometimes it can be what? Yeah, it's just that, guys, man. It's just that price you're looking for this resistance, you're looking for price to get to that resistance, but it didn't get there, and then you see it dropping. It gives you an insurance entry that yes, price is still gonna continue dropping. You take your entry, you take your sell position here, either a reduced risk entry or a risk entry. You see, because like it will just be better to just enter like that without anything assuring you that yes, price is continuing to drop. With the entries, guys, let me quickly just touch on something. Let me quickly just touch on this. Let me quickly just touch on this. When do you know how to use when do you use a reduced risk entry and or a risk entry? Let me say your pattern is small and it's tight. That's when you can use a reduced risk entry. Compared to this, you can see that this pattern is obviously bigger than this one. It would be better for you to use a reduced risk entry on a larger pattern like this, because obviously like that stop loss is wider. We know stop loss is a lot is bigger, and the reduced and the what the risk to reward is just 2%. So in terms of when the pattern is bigger like this, just use a risk entry. But if pattern is tight like this, don't. That would be greedy for you to use a risk entry. So just use a reduced risk entry. Let me quickly also show you a trade that I took today, but it took me out for an L. So yeah, we caught this trade actually, and I walked away with 3%. It was roughly around 3%. So yeah, when I woke up, I was seeing this. I was seeing something like this, not something like this, just something like this. I was seeing a continuation pattern, and I saw a continuation pattern. Yeah, my error was here. I saw a continuation pattern. I was on the 15-minute time frame. So yeah, and then once I saw this red candlestick, this one, the dragonfly, it's a reversal candlestick. I was like, okay, I'm entering. Then I entered on a risk for a risk entry. Entered, my stop loss was somewhere around three. The stop loss was here. Then I was targeting for price to come all the way down there, all the way down here to this value area, the big value area. But then just a few moments, few minutes, hours, I think it was just an hour within the trade, shot all the way up and it took me out for an L. You can see I have a TA, I even journaled the TA, I took it today. Pound, Bitcoin USD, risky trade. It wasn't risky at all, and I raised 0.5%. It was very valid. Entry was high probability. You can see, guys. So let me just show you. This was the setup, just the setup that I showed you. This was a trade. Yeah, this was a trade, and this was when he took me out for an L. But yeah, guys, I hope you learned enough. We are actually finding ways to improve. You can always leave a comment in the comment section. Tell us where you need to improve or where you didn't understand. And trust me, I have all the time in the world. I'm not unemployed. I'm a student, but I manage my time very well. And I'm gonna do another video for you guys. So from Stephen Shakes, have a blessed day, guys. Have a blessed day. Oof.